Perfect. Hi, Peter. Thank you so much for tuning in today. Thank you everyone for joining. We will have NorthWest Copper, which is a copper story based in British Columbia. We got a portfolio of assets chasing porphyry mineralization. Peter is a renowned geologist and has spent a number of years in the mining space, working at various investment banking firms, as a banker and as well as a analyst and as also as a fund manager. So Peter, maybe you can kind of touch on your background, tell everyone what you've done over your career, and then we can jump into the NorthWest story.
Sure. I'll go really quickly. Yeah, I'm a geologist, bachelor's and master's degrees, worked kind of all over the world, a long time for Newmont Mining, and then ended up on the finance side, analyzing companies and mining investments for a UK-based hedge fund, and then worked, as you said, in investment banking, helping companies raise money and advising them on basically buying other companies. And then I've been running NorthWest Copper since March 2021 when we created the company.
Perfect. And maybe from here, we can kind of go into the latest news on the latest drill results, talking about what's going on over there. And then if we have any questions, we can answer those after.
Yep, sounds good. Thanks. I'll share my screen.
Perfect.
All good?
Okay. Yep, perfect.
All right, so this is my second one of these, so I'm gonna spend more time just talking about our latest results rather than overview, but I will remind everyone of where we are and why we're where we are. So our projects are located in north central BC, north of Prince George, between Centerra's operating mine Mount Milligan and their past producing mine and potential future mine at Kemess. So we have three main projects: Stardust Kwanika, which is our flagship; Lorraine, where we recently released an updated resource close by to Stardust Kwanika, and then East Niv. Why are we in BC? I mean, we want to be in a great jurisdiction, so we're in Canada. If you're in Canada and you want to have copper, you want to be in BC, you can see all these copper mines, either past producers or current producers or advanced projects shown with the stars here. BC, obviously, you know, the place to be in Canada for finding copper and mining it. And our own projects, we're in a really good part of the province, good infrastructure, good place to work, lower elevation than the coastal parts, and you know, really advanced and good infrastructure where we work. We've got a big portfolio, as Sunil said, about 150,000 hectares, 100% owned by NorthWest, so lots of room to roam. And we are focused on creating value for our shareholders by advancing our projects and trying to grow them at the same time. We believe in making and creating partnerships with the First Nations groups in the areas where we operate, which I'll also touch on. And we have had a very big program this year, which is still in progress and lots of news to come. So lots of different projects being tested. And I'm just going to, I have this slide back in my deck, and this is really to kind of introduce how NorthWest started without going into a bunch of detail, but kind of philosophically. The copper world, you know, there are fewer examples of projects going into production by smaller companies than there are in the gold space. And one of the reasons for that is because there are the distribution of deposits is a little bit different, which is really driven by the geology of copper deposits. So copper deposits tend to occur either as small and high grade or as big and low grade. And small low grade one or small high grade ones are easy to build and finance, which is great. But they tend not to have scale that's of interest to bigger producers or sometimes to investors. Big projects are hard for small companies to build, and that's mostly because raising a lot of money, multiples of $1 billion, is hard for a small company. So really, when we formed NorthWest Copper, what we were trying to do was come up with a project that sits in the middle. So something that has enough copper production that it will be of interest to a broad range of investors and corporates, and at the same time, not too big for a small company or a smaller company, non-producer, to build. And our core two projects, which form that kind of concept and support it, are the Stardust project, which is shown here in the foreground. It's a high-grade underground project, and came into NorthWest as one of the kind of forming pieces of it. And then about 7 kilometers away was the Kwanika deposit. Kwanika out here in the valley, a little more scale, a little lower grade, but quite high grade, and the high grade close to surface. So that's really, what we're trying to do is advance this project combination. But at the same time, as we advance it, we have to think ahead. And when we think ahead, we think about, once we build the infrastructure, a mill that serves these 2 projects, how will we keep it filled, beyond what we have now? We have enough, to create a good project, but you always want to make use of that stuff once you've built it. So we're chasing our high-grade chalcocite zone, which I'll talk about, and we release some information from it. We're trying to expand the footprint of all of our projects. We're exploring the Lorraine project, which is close enough to it that we hope to someday incorporate it and use the infrastructure at Kwanika Stardust. And then further, we're exploring the East Nib project, which is more standalone, but up near Kamess to the north. So, our drill programs are really designed to enhance the value and provide growth, while at the same time we work on our study that shows what the projects look like together. So in terms of what we've done and what we're doing this year, we have our PEA, which will be complete by the end of the year. We'll show that project that I just described, Kwanika and Stardust. We've done a bunch of drilling, so over 40 holes at Kwanika. We've only released 6 of those. We've got Stardust drilling in progress. We've got East Niv drilling in progress. We've got Lorraine. We've got the Lorraine resource, which we put out, and again, kind of highlights this high-grade project close to or close to our what we hope is our future infrastructure at Kwanika Stardust. And then finally, Lorraine drilling, which literally just started really recently. We're actually on our 2nd hole there. Again, just where these are, and again, just for the infrastructure. So Mount Milligan, again, I described this as the Centerra mine, and Kamess, their project. So we've got Kwanika Stardust, our flagship, Lorraine, where we have the resource, and nearby to Kwanika Stardust, and then East Niv as a standalone exploration play. You can see the access roads. We have road access to every project, super important, and rail and power. We work in the territories of 4 First Nations groups, and our goal is to build partnerships with them and work with them. We've had 2 of them on one of our sites recently, reviewing what we've done, sharing how we explore and how we work and how we clean up after ourselves, basically. And we have another group coming to do that. Our 4 groups are Takla Lake, Sekedene, Nikasley, and Gitsan. And we really believe that it's the key to successfully being able to get projects going and keep them going and have support here is to really build partnerships with the First Nations groups. Just a summary on the project. I won't go through all this because I kind of touched on it anyway, but we've got a high-grade project at Kwanika that fits with a high-grade project at Stardust. The sum of the parts is a good combined project. And we rely on central infrastructure to process both. And then we look to find new material to add to it after, kind of post what we have right now. So in terms of drilling, these are the holes that we've released so far. We've had some pretty high grade results, including this hole number 232, which includes this 9.35% copper with 6.65% gold, as well as some other high-grade copper and gold intercepts. This drilling was all done within the southern part of the conceptual open pit. This is the conceptual open pit from our predecessor, Serengeti Resources. And importantly, we've got high grade, but we've also got high grade close to surface. So in general, we're building out the size of this project and bringing material closer to surface that's will be earlier in a mine plan. And then at the same time, we're chasing this very high grade material that we've termed the chalcocite zone, which is kind of a follow-up of our hole 217 that people may know from last year. So it's a bit more clear in the cross sections. We've got 3 cross sections here representing 3 of the holes that were released from our Kwanika drilling. These are slices through the deposit, and show the kind of distribution of basically where the metal is. So in an engineer's world, a mining engineer's world, you divide the world into little cubes. You can see the little cubes here. Each cube represents a value. That value is copper equivalent. So it's, how much copper and gold there is in a block, and the hotter the colors, the better the grade. And then on the drilling, we have histograms that show grade. So you can see 232, 233, and 231 here. The limits of the blocks are basically the limits of where we had modeled mineralization prior to doing this drilling. So you can see in 232, for example, we've added a couple of layers of blocks here above the pre-existing, where we knew mineralization to be. Not only have we added it above, but we've also added higher grade. So this is spectacularly high grade here, sitting above the previously known mineralization boundary. So we've added tonnage or added volume, and we've also helped with the grade on these things. And you can see these in these individual holes. So anytime you bring grade close to surface, it's helpful for a project, tends to be helpful for a project's economics. And then we also have this kind of extra material, this chalcocite zone, which is a potential sweetener to our project concept. And I'll talk a little bit about it here. We've got two examples of it. If you'll allow me to show a little bit of geology here. The hole up top is 232. That's the one from our last release. The hole down below is 217. That was our big hole that we released last year. They both contain the same style of material, which is this black material. You can see it quite clearly up here in 232. The black material is chalcocite. Chalcocite is a very high grade copper mineral comprised of 80% copper by weight, so much higher grade than other copper minerals. That material, chalcocite breccia, is made up of that high grade mineral with chunks of the other mineralization, so our other kind of background mineralization, basically embedded in it. So we're pursuing our project, our combined project of the two deposits, and at the same time we're looking for this very high grade material that could potentially sweeten the economics and provide a high grade source that we could use to add additional cash flow in it. So although some of these zones are not as big as the rest of the deposit, because their grade is so high, they're very high value potentially, and we want to find more of it. And now we found two occurrences of it, 217 at depth, and now 232 this year up shallow close to the surface. So we know we've got at least a couple of occurrences of this, and we'll continue to look for more. Just jumping quickly to Stardust, because we have been drilling there. Stardust drilling a mix. So this is again a slice through the Stardust deposit. This is not showing grade. This is showing confidence. So the higher confidence material is shown in dark blue here, and the lower confidence inferred material is shown in red. Part of our drill program is to drill a few more holes to upgrade some of the red material to blue material. And in addition, we are exploring for more Stardust. So Stardust is smaller than Kwanika. It's quite high grade. If we could add another high grade shoot or zone, it would make a big difference to the project economics. So again, trying to find one, we're conceptually moving forward with the plan to develop the existing resources, but we want to always be looking for more to take advantage of infrastructure once we plan and build it in the future. Lorraine is where we put out our resource recently. Big property position within 40 kilometers of the proposed infrastructure of Kwanika Stardust, and potentially part of a regional project. Big land position, as I said, lots of copper mineralization there. And we have just started drilling there. We put out our resource. This is another slice through Lorraine, same concept. So blocks showing different grades, and the hot colors are shown in magenta here. What you can see, what's interesting about Lorraine is there's almost no drilling at depth here, and normally porphyries, can blossom at depth. So we have obvious targets at depth at Lorraine. We have potential targets to connect up these individual zones at Lorraine, and then we have regional projects there too. So again, we've only completed one hole there so far this year, but we think there's a huge amount of potential there, and we also are excited about the possibility of including it in the proposed future infrastructure at Kwanika Stardust. And then finally, East Niv, we made a discovery there last year. we've been following up on that this year, trying to follow up on these really good first pass results. This whole 81.6 meters of 0.41. So we had a good discovery there last year. Now we're trying to feel our way around it and try and find more of it and figure out what the shape of it is. It does require some work. It's helicopter supported drilling, but the occurrence of good copper mineralization in a brand new area with a big land position close to existing infrastructure up at Kames makes this an exciting thing to continue to go after. So that we've had a program there, have not released any assays from that program either. And I think that is it on the formal presentation.
Perfect. That was a great overview. And maybe you can just touch on the latest drilling then.
Yeah, well, so the last drilling that we put out was that very high grade stuff in those cross sections. So there we've located this very high grade material, the chalcocite breccia, and really kind of demonstrated that we have it in multiple spots and that it occurs close to surface as well as at depth. So we're kind of developing that target, and we want to continue to chase it.
Perfect. And the cash position we have right now, you would say we're fully funded for the rest of this year and going to the following year, you think?
Well, I mean, so we have, most of our exploration money needs to be spent in the current year. That's the way these companies work. The hard dollar balance is something that you hold on to and make sure that you can keep going. But the flow through money is available at you sell your shares at a premium, so that's money, and you have to spend the money in the same year. So that's more like an ongoing thing. So we'll spend our full program this year from the flow through money, but we're not about to run out of money.
Of course. And when you're chasing these type of porphyries, maybe you can explain to everyone that's listening, these aren't small targets that you're chasing, right? These are very large, high tonnage. You can mine these things for decades, right?
Yeah, so that's a good point. What we're trying to do is a balance. So we're drilling for size, not size alone, but we're trying to expand the known high grade zone. And then we've got these very select sweet zones, these chalcocite zones within it. So it's a mix of both. So the chalcocite zones are kind of icing on the cake. We're trying to look for bigger cake and more icing.
Of course.
There is a question about drilling. This one actually, what are you forecasting for third trimester? Well, our main, mainly what we do is we're not a producing company, so we don't have cash flow. So what we forecast is our activities, and so our activities are continued drilling, which we've been doing on all 4 projects in the third quarter. And I will point out, because it's kind of in the slides, but the assay turnaround has again been pretty slow, and we've taken some steps to try and speed that up. But from a news flow point of view, we've only put out those 2 releases, and we've been drilling since March 25th with multiple rigs. So we've got a lot of news flow backed up, and it's frustrating to have it take a long time to come out. But it will be coming out. There's no possibility that we won't have a lot of drilling news flow to put out. So that's going to be exciting. Sunil, do you want me to answer all these questions, or how
as you want?
Okay.
So maybe I'll answer them as you choose.
Yep. So I will. The one I'm going to answer, there's one, will I present in a gold equivalence amount? So we have typically reported copper equivalent, and of course you can also back calculate a gold equivalent. We're working on our PEA right now, and as we advance the PEA, we get in a situation where we're going to have to take a view on what we think the recoveries will be for different metals. And then we will need to factor in the recoveries into those equivalent calculations. So, those are things that will come out as part of the kind of recovery projections of the PEA.
Yeah, I saw like on some of the previous intercepts that we had in a gold equivalent, they were quite high grade over long intercepts over 100 meters, and they were very high grade, very high grade numbers.
Yeah, so it's in our kind of, and I'll caution that this is based on a very rough study, but we're looking at on an equivalent basis probably a roughly a third of revenue, depending on what gold price assumption you make, coming from gold. So this is a project that's very rich in gold, which is helpful. First, we're focused on copper. We believe in the future of copper and future demand for copper. But one of the nice things about gold is it provides a company with a bunch of extra financing options, because you can sell gold in different ways that you can't necessarily do with base metals. And that, when you get to your financing period, you can use that gold to your advantage to raise extra money and make it easier for yourself to build a project.
Perfect. We got one more question there. Do you see that?
Yeah, I'll answer the last one. Is the metallurgy at Lorraine compatible to Kwanika Stardust? So the Kwanika Stardust, just I'll answer first in an indirect way. Kwanika Stardust metallurgy is compatible with each other. They have the same mineralogy essentially, which is chalcopyrite and bornite. For the leaving out the chalcocite, which is a little bit different, but is not likely to be a problem. At Lorraine, there's a very limited amount of metallurgy that's been done in the past, so we will need to do some. But the real key to putting two different kinds of deposits together is to have the same ore mineral, or mineralized mineral. So in this case, at Lorraine, we have chalcopyrite and bornite. It's the same mineralogy as we have at Kwanika Stardust. The grain size looks sort of similar. We need to do some work on the hardness and all that kind of thing. But these projects are pretty similar project to project, and based on the geology, which is usually a good guide to the metallurgy, I wouldn't anticipate that we'll have problems with Lorraine versus Kwanika Stardust.
Mm-hmm. And maybe you want to answer that last question about institutional investors, because we are heavily owned by institutions, right? So
yep. So there are we have had a lot of conversations with institutions over time, and I myself come from an institutional background. I would say there are a couple of things that steps we need to attract more institutions. Obviously, institutions prefer bigger cap companies, notwithstanding they also like to find value. So, but it's and they also like companies that have more trading liquidity. So, those are, you need, if you're an institution, you need to be able to trade into a company and trade out of it. The other thing about institutions, they take longer to buy, so they tend to do a lot of work in the background before they move forward. And they also are probably more tuned into the PEA than some retail investors may be. Generally providing a guide to what the economics will look like, what the costs will look like, the capital, and our view of what a production plan will look like, is something that most institutions will want to see. So we think that the PEA is a good catalyst for additional institutional ownership.
perfect. I don't know if anyone else has any more questions. They can put it in the Q&A box. If not, we will wrap it up here, and we will get this out on the. I think is there another question coming in here? No, I don't see any more questions. But yeah, we'll get this wrapped up, and we'll put this out on the NorthWest Copper YouTube page, and everyone could rewatch it there. And if you have any other questions, you could send them to the info email that will be provided after this webinar is finished.
Yeah, and just there was one final. So the questions were on why the PEA, when it will come and why it was delayed. The short answer is mostly drill result related. So it took a long time to trickle in even the 2021 results. And then we have disclosed that we intend to have the PEA out before the end of the year.
Perfect.
Wrap it up there.
Thank you. Thank you, Peter, for your time. Thank you, everyone, for tuning in. And please look out for the replay. I'll send it out to everyone once we have it all done up.
All right. Thanks, everyone.
Thank you. Cheers.
Yeah, bye.